The broadcast is now starting. All attendees are in listen-only mode.
Well, good Tuesday morning to everybody. Thank you for taking time out of your schedule to join us for week number 4 of our Index Universal Life Boot Camp series. My name is Matt Alina. I'm one of the marketers here at URL Insurance Group. And again, thank you very much for taking time out of your day to join us for our boot camp series. We are in week number 4 of our 5-week training series. And today we will be discussing preparing effective policy illustrations. Now this is where you're going to be able to learn how to make the numbers dance and how to be able to go to your client and show them with confidence what it is that they're looking to purchase and show them why and how these numbers work. So to kind of give you a quick overview of what we've already discussed, in week number 1 we discussed the Index Universal Life mechanics. How does the policies work? What are the different index crediting strategies? Just some of the different moving pieces to an Index Universal Life policy. In week number 2, we discussed how insurance companies cover index credits. How does the cash value of that get into that life insurance policy? How do the different index crediting strategies work to be able to grow that cash value? Week number 3, which was last week, we discussed compelling product features. What makes North American a great company and what makes their products stand out above the others in the competition? As we've discussed, sales in Index Universal Life products have grown exponentially, and this whole series is designed to help you better understand how these products work and to also get a better grasp and get a better confidence when you go and present these types of products to your clients. So now in week number 4, we're discussing preparing effective policy illustrations. Now before we move on here, I know there's a few people on our call today that are new to URL, so I just want to do a brief introduction to the URL Life Markets team. You can reach us toll-free at 800-926-8875, and our website is urlinsgroup.com. The Life Markets team is headed by Steve Clemens. He's the Vice President of our Life Markets team, and he's at extension 132. You have myself. I'm one of the agent support specialists, aka marketer, and I'm at extension 141. And Joey Fry is my partner in crime. He's also one of the marketers here, and he's at extension 157. When you do business with URL, you are assigned your own dedicated case manager. So for agents with last names A through L, your case manager is Rosemary Evans, and agents with last names beginning M through Z, Rachel Cook is your case manager. And then if you have any licensing and commissions questions, Judy Warner at extension 109 can help you with that. As I mentioned, you can find us on the web at urlinsgroup.com. Now our website is password protected, but feel free to use our temporary username and password if you're brand new to URL. The temporary username and password will help you run some quotes and see where you can get the links to online applications and paper applications and underwriting guides and all of those things. The temporary username in lowercase letters is Gemini, and the temporary password in lowercase letters is Partners. If you have been doing business with URL, and the definition of doing business with URL is doing any line of business, at least one case every 12 months, you should have your own personalized username and password. If you don't have that, feel free to contact one of us and we'll get you in touch with the folks that can reset your ID and password. If you haven't done any business with URL in the past 12 months, then the temporary username and password will get you in just to get some basic quotes. I do want to talk briefly about our Gemini program, and anyone that is interested in going into more detail about our Gemini Partnership Program, feel free to give any of us a call here. The Gemini Partnership Program is unique. You're not going to find this with any other brokerage in the area. The Gemini Partnership Program is a partnership program on steroids where we're going to give you best commission rates guaranteed. We're going to offer you exclusive quarterly bonuses. We're going to offer you free E&O. we'll have what we call our Gemini jaunts, which will be just different outings, whether it's golfing or maybe going out for a dinner. And others. We'll also have exclusive Gemini partner networking events, and we'll have an annual retreat. In addition to that, there's some other bonuses as well and other perks. So if you are interested in learning more about the Gemini Partnership Program, like I said, please give one of us a call. We'll be happy to answer any questions that you have. So without further ado, I'm going to introduce everyone to Kim Grun. She's our drill sergeant and one of our internal representatives at North American Company, and she's going to show us how to effectively prepare policy illustrations. Good morning, Kim, and thank you very much for joining us.
Oh, good morning, Matt. Welcome, everyone. And as Matt indicated, today we are going to talk about effective illustration tips here. So let's get started. And just a side note, URL and North American have been lifelong partners. For those of you who may not be contracted with URL just yet, just a first-class company, and like I said, has been a strong partner with North American for years. So today we're going to talk about effective illustration tips for our indexed universal life insurance plan. And these disclosures apply to our entire presentation. And here's what our agenda looks like today. We're going to start off, we're going to cover several items that you as an agent should take into consideration when you're illustrating our indexed universal life products to meet the needs of your clients, not only today, but also in the future. Next, we're going to take a little in-depth look at how historical lookbacks are calculated and used in North American software. And then last, but not least, not all things are equal when it comes to comparing one company's indexed universal life illustration to another. So what we're going to do is help you understand how to effectively illustrate an illustration based on product design rather than just interest rates alone. So we're going to start out with some tips and considerations when it comes to designing those indexed universal life illustrations. First of all, amount of insurance. This is critical, and this is really the basis of the sale. So it's really important to make sure that the amount of insurance is going to meet the client's needs for that death benefit protection. Obviously, this is life insurance, and we need to make sure that we're adequately protecting them in their working years. A lot of times when you're using indexed universal life for retirement planning, sometimes we think that they only want that minimum amount of insurance in order to maximize that cash value at retirement. One way to make sure that the client is properly insured is to add maybe a separate term policy for the additional coverage that they need during those working years. So you really want to make sure that that amount of insurance is what the client needs, and obviously you're going to be doing that probably through a needs analysis. Another idea is to leave room for that premium growth. What about those clients that want to increase their premium to their indexed universal life over time? If you start out with too low of a death benefit, they could be restricted from increasing their premium in the future, without causing that policy to become a modified endowment contract, or maybe having to go through underwriting to have their death benefit increase. So if the client ends up not making those increased premium payments or not needing that additional coverage, they can always reduce that death benefit in the future. But with North American, with our software, we've got an easy way for you to illustrate premium increases over time, which in the end, it's going to result in a higher death benefit, a possible higher income stream, a higher target premium. You can use our software, and if you see the screenshot here, you can use our software. There's a changes button on the software, and you can use the software to make specific premium changes. You can even do percentage increases, or you can just increase in set increments, say like a $100 increase every year. So you see that screenshot, and you see those fields that you can enter that information in. Death benefit option, level or increasing. A lot of times when you're using the increasing death benefit option, that guideline premium will be higher than with a level death benefit option, which is helpful when you're max funding an IUL policy. If you use the increasing death benefit option, it allows a lower face amount, and what that's going to do is keep the cost of insurance low, and it can produce a higher stream when using this for retirement planning. And a lot of times what we do on these retirement income cases is we may be solving for the death benefit based on a premium. And if we're using the guideline premium test, typically we're going to start out with that increasing death benefit option. And then the year following the last premium payment, we change that death benefit option to level. And that's going to maximize the income stream. Also, two of the main concerns with the increasing death benefit option is that it's allowing such a low death benefit to start with that it may leave the insured underprotected, and sometimes a low death benefit may limit them from paying those higher premiums into the policy in the future years. So another option might be, rather than just solving for that minimum death benefit, what you could do is specify a higher death benefit and then still have that increasing death benefit option to make sure that the necessary protection is in place. And then what this is going to do too is also leave room for additional future premium payments. So definitely another option. Another option you need to consider is whether or not you use the guideline premium test or the cash value accumulation test. Both of these are IRS funded methods that are used to qualify for life insurance. Both methods use a 7-pay test for MEC status. Guideline premium test, this is most commonly used. I'd say we use this in probably 90% of all of our illustrations. It does have premium limits where you can pay the greater of the cumulative of the guideline premium or the guideline single premium. And these limits, sometimes they do prohibit that desired funding. You know, if the amount they want to pay would exceed those limits. You can use the level or increasing death benefit option when you are using the guideline premium test. When to use the cash value accumulation test? It can be when you're running that quote that the guidelines are limiting that payment structure. And even in those cases where you don't mind the policy being a modified endowment contract, if that's not a concern, using CVAT certainly can come into play. In those types of cases, then really the guideline premium limits really aren't an issue. With the cash value accumulation test, what it is the death benefit is relative to the account value within the policy. So as the account value rises, that death benefit has to rise as well. So we call this reaching the corridor. So typically the corridor is reached much earlier in a cash value accumulation test illustration than it would be in a guideline premium test illustration. So since the death benefit is going to raise when necessary, there's no advantage to using the increasing death benefit option, changing to level with a cash value accumulation test type illustration. Some other tips for you on illustrations. It's recommended when you're running an illustration that you input the actual date of birth rather than the age. Some of our products use age nearest, others use age last. And so if you input the date of birth, then our software is going to use that corrected or that correct issue age based on the product specifications. Also in the tabular detail portion of the illustration, it's showing the insured's age at the end of each policy year. As far as loans and withdrawals, in order to effectively design an IUL illustration that shows loans or withdrawals coming out, it's important to know what the illustration is telling you. You know, loans or withdrawals illustrated in a given year are actually reflected as if they're coming out on the policy on day one of that year. Also, as far as duration of cash value, a lot of times people are only going to illustrate income for, say, 20 years in retirement. Maybe ages, a lot of times we'll see, say, ages 66 to 85. But I think you have to think about, what if the insured lives longer and maybe they're really relying on this income in retirement? Why not, when you're running these quotes, not only run them for 20 years, but show an income stream that could continue to age 100. And actually, age 85 might be less than their life expectancy as well. Also, sometimes the difference in illustrated income is minimal, and the benefit of having that income longer, a lot of times, is going to far outweigh that difference. So now we're going to spend a little bit of time letting you know, looking at the historical look-back calculation for Indexed Universal Life. On all of our illustrations, you will see the look-backs for each of the indexes, say 5, 10, 15, 20, 25, even longer. So we'll let you know how we actually calculate those historical look-backs. When we calculate those look-backs, we also use our current caps, floors, participation rates for historical performance of that particular index. So let's look at the steps that we use to calculate these look-backs. What we do is we calculate the geometric average return for the first 25-year period, which starts on the first trading day, say starting, we're using the S&P 500, say starting in year 1950. What we're going to do is we're going to do that for every trading day starting in 1950. And then what we're going to do is we're going to repeat those steps. We're going to repeat the first 2 steps for every trading day of every year until we get to the 25-year period ending December 31st of the most recent year. This is going to give us about $10,000 data, or 10,000, I should say, data results. And then what we're going to do is we're going to average those together to get the maximum illustrated rate for the S&P 500 annual point-to-point. Every year, by March 31st, all companies, not just North American, we update our historical look-backs to reflect the prior year's data. So because we've got a year's worth of numbers, the expected movement on a year-to-year basis, likely it's going to be relatively strong, relatively small at this point in time. But if a company does change their cap or participation rates, then that maximum illustratable rate will be recalculated to utilize those current cap and participation rate changes. So the last area we're going to cover today is what to look for when you're running an illustration to compare to an IUL illustration from another carrier. It's not always as simple as just matching those interest rates, and we'll show you why here. You know, all things considered, you want to be fair when you're comparing those illustrations, but just by simply matching the interest rates, you could be ignoring some other design elements of the products that you're comparing. So instead of matching interest rates, consider using what the company's maximum illustrated rate is for the various indices. So consider discounting both products by the same amount. So just let's say, for example, the North American product that you're comparing to uses around a 7% maximum illustrated rate. I think our Builder IUL right now is 7.28, but let's just round that off to 7%. And maybe the other company that you're comparing to, maybe their maximum illustrated rate for the product that you're comparing to uses 6.8%. But maybe you don't want to illustrate at the highest rate allowed. So in this case, it would be good if you would reduce each rate by the same amount. And say you're going to choose 50 basis points. So you'd run the North American interest rate at 6.5% and the other company's product at 6.3%. Either of these options are going to keep one from ignoring the design elements of the products themselves. As far as product pricing, just know that products are priced to support different caps. So there could be internal charges or not internal charges to pay for caps associated with the product. Also, variable interest rate loans. North American is currently illustrating variable loans at 5.47%, and will allow you to illustrate our loans as low as our current variable loan rate of 4% to our capped rate of 6%. So if another company has a higher loan cap or no cap at all, you might want to consider illustrating their loan rate higher. Also, issue age. Just like I mentioned earlier, North American has products that use age nearest and some that use age last. And so this could be a difference in comparing illustrations. And I know when I've done some comparative illustrations, a lot of times, you know, the client could be a whole year younger with North American than they are, you know, with the other company. So again, it's important to input that date of birth on each illustration so you know that the correct issue age is being used. And also know, you know, what the calculation is for the company that you're comparing to. And then here the same thing, match policy years for premium and disbursement based on the age difference we just went over. It's important to match premium payments for the same number of years rather than just a certain age, because otherwise you could have one illustration showing one more or 1 year less of premium. So that same thing could be true when it comes to illustrating loans or withdrawals being taken from a policy. So you want to make sure that when you're comparing these illustrations that you match the policy years rather than the ages, to make sure that you keep the illustrations in line with each other. Daily index sweeps, and I think we talked about these in an earlier session. This is when companies buy options, and this is when your money starts performing based on the index. A lot of companies do annual, quarterly, monthly, maybe twice a month index sweeps or buckets. At North American, we do it daily. So the client's money is going to work for them right away. We're measuring the performance of the policy based on the index on day one or the very next day after the policy goes unpaid. Interest credit based on the beginning segment value. I think we talked about this in an earlier session as well. This is a great value in the Design of North American's products that we do. Our IUL interest is credited based on the beginning index segment value, regardless of policy charges, where most other companies do credit interest based on the segment after charges. So also, we don't require any money in the fixed account. All the allocation can be to the index account. We've also got an interest rate bonus that is contractual. It's 0.75%, and it's available in policy year 11 for our builder and our guarantee builder. For a rapid builder, it is year 16. So in essence, that floor becomes at 0.75%, and starting in year 11, or in the case of the rapid builder, year 16. We've also got a 3% minimum account value. This is a true-up. One of the main highlights when you're talking about Index Universal Life is that the index floor is guaranteed never to be less than 0. And in addition to this year-by-year minimum of 0, North American will maintain a minimum account value for the index segments. And so this minimum account value is going to be calculated using a 3% annual interest rate along with current policy charges and expenses, as if all the premiums had been allocated to the fixed account since the policy started. So what we do is every 8 years, starting on the 8th policy year, the policy account value is going to be increased to equal that minimum account value if higher than what the index segment has earned. So this 3% true-up, it's going to take place also if the insured dies, if the policy is surrendered, or if the policy is in danger of lapsing due to insufficient premium, or if the policy reaches its maturity date. So the only time the account value would actually be adjusted and made available for, say, loans and withdrawals is each 8-year true-up period. So that minimum, 3% minimum account value is huge. And like I said, what we do is a look back every 8 years. And so if the policy isn't performing to get at least that 3% minimum account value, what we'll do is every 8 years, we're going to true that up. We will do it earlier, obviously, if the insured dies or if the policy is surrendered or if the policy is in danger of lapsing. So another nice feature of North American's IUL products. Other company considerations, obviously our ratings and our financial strengths. Just remember, a product really is only as good as the company that stands behind it. Take a few minutes to really compare the financials of the companies that you're running quotes for. North American, we've been in business since 1886. We're privately owned. Our ratings are A+ Superior by AM Best and also A+ Strong from Standard & Poor's. And we also have a 90 Comdex rating right now. So as far as financially, North American is very strong, very stable. This pretty much concludes our illustration on our session on illustration tips. Just in summary, we gave you some tips to help you design that best illustration you can for your clients' needs today and tomorrow. And I encourage you, if you've got clients that you're looking at, to get a hold of both either Matt or Joey, and I know they'll help put together a case design. They've been running these quotes for years and will help you with those case designs for these IUL illustrations. Also, I showed you how we calculated our historical lookbacks for each of the indexes. And then just gave you some tips when you're comparing illustrations with other companies. It's more than just comparing those equal interest rates. There's other things that you need to take into consideration as far as comparing company to company. Bottom line, your client's going to get a well-designed illustration with the help of URL, Matt and Joey, and also your knowledge of how those historical lookbacks are calculated. And also, we helped you so you can adequately compare the different products with the different companies. And you as an agent got great competitive products with North American, and North American's tremendously strong company as far as financials and stability. We've been around for years. So here's where the homework comes into play, and I know Matt had mentioned this earlier. As we go through these IUL boot camps, think about clients that would benefit having an Index Universal Life plan. Give them a call and get Matt and Joey involved in helping you design these illustrations that are going to meet or exceed your client's needs. And that pretty much concludes the illustration. Matt, do we have any questions from anyone? Anything you'd like to add? Matt, I'm not hearing you. Wondering if you're not still on mute.
There we go. Thank you, Kim.
Okay, you bet.
I muted my phone.
There you go.
So yes, we can take any questions that anyone has. Feel free to type those questions, and we'll get those questions read aloud and get those questions answered. We can also, a lot of times people have questions at the end of the presentation, so feel free to give us a call at the end, even after we hang up. You can reach us toll-free at 800-926-8875. You can reach me at extension 141, and you can reach Joey Fry at extension 157, and of course Steve Clemens is available at extension 132.